Simon and I have basically we just make our phone conversations public where every time we get on the phone with each other, we just talk macro for like an hour before we get to, it's like could have been a 1 minute call, but we got to talk macro in the market for a bit. So yeah, I mean, context wise, like I'm host of the Canadian Real Estate Investor Podcast. Simone's host of the Canadian Investor Podcast. What's happening in the macro space matters a lot to us. For me, mostly interest rates, which is what, real estate's a heavy debt based product, and it impacts the way that we buy and sell homes a lot. And then for Simone, I think, I mean, you're seeing the stock market move quite a bit as a result of this. And I think today's theme is really going to be Kuzma, right? Like trade war. I know Lutnick came out with some fun comments this week. So curious to
hmm
get your thoughts, man. What's going to happen here?
Yeah, I mean, I was gonna say I'm curious to get your thoughts on housing and the Korea revision, but on the trade front, I mean, it's pretty interesting. I guess they're just the U.S. and Canada are just trading verbal blows right now. I think
Yeah.
the U.S. wanting concessions from Canada. I think they cited more specifically some of the bans on U.S. wines and spirits. They want
Yeah.
Canada, not all provinces. I think Alberta is one of those. Saskatchewan, they removed it as well, if I remember correctly. But obviously, Ontario, Quebec, some pretty important provinces. They're asking Canada to remove that to basically get started on negotiation. And then Carney is doubling down on the tough talk on Canada's side, saying that they want the U.S. to remove those tariffs or trade irritants, I think they both called them,
Right.
on things like steel, aluminum, autos, forest products. So I don't know. It's just it seems like a PR thing. I'm not sure it's the best approach from a Canadian perspective. Maybe just
Yeah.
let it slide off your back and do those talks in private is probably a best approach, even if you want to be have a more hard line. The U.S. tends to remember about those public statements. They're I don't know.
Yeah, I
They
mean, they
seem like
definitely take
yeah,
things personally. I agree with that. Like,
yeah.
I think that we're at like a very theatrical like brand of politics right now where, social media, everyone's very engaged. They can monitor, comments, public sentiment around stuff like almost constantly, right? And so they're really like trying to feed into and then like benefit from populism. And so you'll see them kind of like fire shots and like see, the Liberal Party in Canada like was doing this a long time in the last, before Carney. They would like leak that a policy was going to happen, and then like if it was well received it would happen, and if it wasn't then it wouldn't, you know what I mean? You know what I mean though? Like I feel like that was a
Oh
thing.
yeah.
And so but I think so you sort of get this like, I don't know, it's like, I mean, obviously like Trump is very much like a media personality, right? He likes like attention. He's on TV and it was historically, and likes to do things a lot more in public and kind of make like a press release and a bit more of a splash, and the markets
hmm
move like a lot more violently as a
Yeah.
result, right, than things being done in private. Um,
Honestly, it feels like we're just being given propaganda from all sides, right? Like just from
yeah,
the U.S., Canadian, the U.S. When you think about the Iran war, Iran, of course, as well. You're seeing all stakeholders just throwing stuff out there, whether that's the reality or not, whether they're being truthful or not. They want to see the reaction. They want to control the narrative. They want to put some confusion in the eyes of traders. I mean, Trump, I think it's pretty clear his strategy now is trying to make it look like things are doing better than they are in the Middle
like
East
economically.
economically. Well, it, just showing that the Iran war is actually winding down and coming to an end just to try and get oil prices down at least temporarily, right? It seems to be the strategy. Just throw stuff out there, whether it's right or not. Then you have Iran saying the complete opposite. Not I trust one over the other more. I'm just saying you're constantly battling this information. That
Yeah,
what do you make of it?
yeah, I mean, it really is just like it's like a war being fought in information. Not to give like an Alex Jones too much credit for the title Info Wars, but like it is
I mean,
it's
it
constant
is
like
like right now.
it's
Yeah.
psychological warfare
hmm
for voters, for the markets, right? Like markets are the things where you evaluate it the most. I mean, consumer sentiment is like up and down. The VIX is up and down. Oil up and down. Like everything. I feel like I could be wrong, but like I feel like swings are like way more violent than like any even Trump 1.0, like the 2016 phase. I mean, I guess you saw this during COVID a little bit with like lockdown, no lockdown, like kind of the switches on and off. But it feels like the volatility is a lot more violent than like historical market, even in a wartime market, right?
Yeah, yeah. I mean, it does feel like that right now. It's really a headline-driven market, and like the on the Iran side and the potential disruptions, I think maybe we're starting to get market fatigue regarding that, even though the numbers
Yeah,
still really do
already,
not
yeah.
look good. Like I was just doing
I
some
know.
research for this, and yes, or in the last 24 hours, Reuters reported that there was only 5 ships that actually passed through
Oh,
the
you
Strait
watch
of
their
Hormuz.
traffic tracker on, is it on, like, do you watch it on X or do you watch it on like their site or?
Yeah, watch it on X and on the side. There's like Kepler data, I think for the most part is used for a
Yeah,
lot of these. And you had like the peak since the war started was last Saturday on April 18th. Apparently, a bit more than 20 ships went, and then that compares to 140 pre-war. So for all
right,
the headlines we're getting that things are fully reopened, the reality it's just not true. And then you hear of
right.
news of, ships being blockaded by the U.S., Iran, vice versa.
So
I think
then, like,
that's
how does this play out? I know we talked about it, and I don't want to beat a dead horse too much
yeah.
on the on oil because we did discuss that a
Hmm.
lot here last week. But you know, we're still like in the same perspective. I mean, if like this is going to, it's not like there's no way this doesn't lead to continued upward pressure on oil prices. That gives us a really fast spike on inflation and then demand destruction. I would assume, like, it's not really showing up in the data yet, right? On CPI or kind of,
I
I
mean, it
guess
did.
we're in the
Yeah,
early
it
innings.
did.
Yeah, I guess it was a
Did you have a
big
look?
month over month jump.
Yeah, did you have
Yeah,
a look at the month over month jump? So, yeah, for the most part, I'm just pulling it up here.
the
Um,
craziest
y-
is that like the gasoline chart they put it on this on the StatCan CPI site. I'll pull it up. It's pretty
yeah.
crazy.
Well, yeah, and it's
But
kind of funny looking at the data. So the headline went from I think 1.8 to 2.4, if I remember correctly, for February, but the increase was 0.9% month over month. So obviously over 8% annualized. So pretty big increase. Yeah, there you go. So one of the issues that we're seeing, and a lot of people don't remember that, but last year, March of last year, the carbon tax was still in place.
yeah,
So
yes,
the U,
they do acknowledge the base
yeah,
effect
the
in
they
here, I
did,
think.
yeah, in the report. So that's why the 5.9% year over year
Yeah,
increase
it's
for
right here.
gas doesn't
Yeah,
feel as bad as probably what I've been
yeah,
experiencing at the pump, and probably you as well. I think you're driving a diesel, so
yeah.
you're
I
feeling it. But then you look at the month over month, and it's up
Yeah, I mean, if you
21%.
look at, well,
Yeah,
yeah, I mean, if you look at like as we get to the bottom of this gas price surge, like
yeah,
that
exactly.
inflation's going to be insane. Like, sure, the
April, you're
base
gonna
effect's
start
great
seeing
right
it. Yeah.
now.
Hmm.
Yeah, but it's, yeah, so that's a good point. So you've got April, May are going to read like pretty high probably on CPI.
Yeah, yeah, exactly. No doubt about that. I mean, food is starting to increase again, which is
Yeah,
it's too bad, especially for lower income households. I think if
I know.
you're better off, you can probably afford the increase, but it's up 4% year over year, 0.3% month over month. Food purchase from stores up 4.4 year over year, and the price of fresh vegetable is up 7.8%, and
Yeah,
that was the
crazy.
largest increase since August, yeah, of 2023.
Yeah.
So not great
Um,
when it's stuff that you need to live, right? So
I think it's really bad for consumer sentiment too, right? Like,
yeah.
you know, you mentioned it's like not great, and again, like not to
Mhm.
dehumanize the argument that you just made because I think it matters a lot, and I feel for all the people suffering as a
Yeah.
result of this. But um, the you know the two goods that people buy the most frequently, food and fuel, right? Shelter, we already saw like a huge, and like we're kind of past that phase. Shelter
Yeah.
inflation is actually
Mhm.
coming down, but food and fuel, the two costs that people pay the most. And actually, sorry to jump back to shelter, we still do have the highest number of people renewing mortgages at increasing rates ever in history. So you will actually see an increase in shelter costs throughout the year as well. And shelter inflation, while it's coming down, isn't going to be low, right? Like it's just coming down from like 5%, you know, to two or whatever.
Mhm.
So you've got your three biggest costs and your three things that are basically necessary for survival, right? Food, fuel, even water is experiencing inflation, which is crazy, and shelter. So if I'm a consumer, and this is where like how quickly does this translate into, and why is it different from the COVID era? Um, I'm feeling this like my consumer sentiment has got to be getting
Oh
destroyed,
yeah.
and like that's going to lead to a much weaker consumption within, I mean, it's probably already started, right? Like I would
Well,
imagine.
yeah. I mean, if you're a
Yeah.
consumer, especially if you're in the bottom, let's say 50, 40% of household income in Canada, you don't have a lot of financial assets to help you weather those higher prices. You have a bigger proportion of your expenses that go to those essentials, so food, lodging, and I mean, I guess gas, it really depends, but let's just say transportation as a whole, depending whether people are using public transit or not. So you have a bigger portion that's going towards that to begin with. So you're being impacted more and you don't offset it by higher asset prices. And it's not, and we were texting, right? I don't know if you had realized it before I texted you, but core inflation is actually not looking all that great. It's
No.
looking good on the surface on a year over year basis. I don't know if you could pull that one up or I can.
I don't think it was in there daily. I could pull up
Yeah,
the
that's
table on
okay.
it.
Yeah, I can pull it. I have it
Yeah,
open here.
I have the table. Yeah,
Yeah.
you got it, beauty.
So it might look like it's trending down. CPI common, I just disregard because it's like, common basket. I still am trying to
Yeah.
figure out how they actually
I
come up
know.
with that
Yeah.
one. But the median, obviously, that's the middle point increase there of all the items. And then you have CPI trim removes the most volatile items. So you can include usually food and energy in those. So they look like they're trending down. But if you do the calculation here compared to month over month. So these are all year over year, looking at 2.3 for median, 2.2 for trim. But if you start looking at the difference on a month over month basis, it's actually accelerating when it comes to a medium, and trim is about 2.2%. So I think it's right
Yeah.
around 2.7% for median. I did the calculation a bit earlier, and 2.2% for trim. So you're not really hearing about that in the media right now, just because you have to actually look at the index levels and do the calculations yourself. But
Yeah.
that's not a great sign for the Bank of Canada either, something that I'm sure they're looking at. Not quite, again, I still don't think we're seeing any rate hikes anytime soon. I think they'll wait and see next week. It'll be
Yeah.
interesting what they have to say, but I would say with high degree of certainty that they'll wait. They just want to see because the economy is clearly not very strong right now, and even those higher prices, they're just trying to weigh both things, probably trying to get more data, trying to see a month of more or two of more data, especially with the oil shock that we're seeing. Maybe the war de-escalates a little more. Maybe there's more clarity on that.
Mhm.
I don't understand why they would hike or lower rates. I think it's just going to be a wait and see.
Yeah, I agree. I agree. I guess I think we have at the next announcement Bank of Canada monetary policy report, right? So we should get some clarity as to what their thinking is. Although I feel like the reports have been kind of like half-assed a little bit over the last little while. Like they're kind of just like everything's like it feels like the COVID era ones, right? It's like
Yeah.
uncertainty. We have no idea, right? It's like, well,
Mhm.
can't you give us like a range of potential outcomes? Like here's what you would do if something went up. Here's what you would do if it came down, right? So um, anyway, let's pivot, I guess, maybe on to. Is there anything more you wanted to add on the inflation
No, I
side, or I
think
think
that's
we're also
yeah. Not to beat a dead horse too much. I guess we'll see. We'll see what happens. It'll be interesting what they have to say next week, whether it's a
yeah,
nothing burger or not. Again, I just feel like it's going to be more of we'll wait and see, and these are the
yeah,
possible things that could happen. But wanted to get your thoughts on housing and the
sure.
and Korea revising down, which is a pretty rare occurrence. It's almost like seeing a unicorn in the wild, right? You don't see that very often.
Yeah, I mean, look, like it is funny because I think I'm such a natural contrarian that like as everybody else gets more bearish, I want to become more bullish, but I think it's still a little bit early. Like, I mean, a lot of these institutions, like the Royal LePage, the Remax, the Korea, in the US, like your NAR, whatever, they have to rally their base, right? They have to pander to the customer that they serve, which is realtors, and realtors are historically bullish, which is not something I've like ever really completely understood because like if you're talking like, oh, they're using it as a sales tactic, like FOMO, it's like, well, you could do FOMO on the other side too, right? Like you could
Yeah.
FOMO sellers and make them and force them to sell. Like not that you should, but you could, right? Like there are two sides of the transaction. You can't just like you don't only benefit by saying house prices are going to go up, so you have to buy, right? Like realtors make money on both the buy and the sell. But I think an optimistic market or a bullish market tends to have more activity. So yeah, they downgraded their forecast. They they've been talking about this like pent up demand for a long time, and I don't disagree that pent up demand exists. To be honest, like we have but if pent up demand can exist, you also have pulled forward demand. So during COVID, we probably pulled forward a lot of demand of people who were going to buy over the next 5 years. Based on the quantity of transactions during the pandemic, you likely pulled forward about 2 or 3 years of demand. Um, and so now we're going through 2 or 3 years of suppressed demand, and then eventually you sort of gradually progress towards a more normal market. The factors that kind of dampen the impact for the market to recover, and I think Korea is finally coming to terms with this, is that number one, consumer sentiment is horrible, and like first they were blaming snowstorms, and then it was trade war, and now it's real war, and it's like sure those things like
Yeah.
consumers are
Blaming
thinking about that stuff.
snowstorms in
Yeah,
Canada, I still have a whole lot of
right.
trouble when I hear
Yeah,
that excuse.
yeah, yeah. But so all of those factors, yeah, like obviously consumers are thinking about this stuff,
Hmm.
but
I'm sure
what
they'll blame extreme heat in July. That would
yeah,
be,
exactly.
yeah.
Exactly. Weather's too nice. Nobody is
Yeah.
buying houses. They're out at the cottage. But yeah, I think that there's like this idea that like pent up demand is like this like bundle of buyers that like eventually it's just loading into a slingshot and you pull it back further the more that demand gets pent up and then they let it go and it just shoots us into a recovery. But that's not really how buyers work, right? Like buyers will slowly re-enter the market as they can afford to, as they have the confidence to do so, et cetera, right? And so it is a gradual return. And we're seeing the gradual return now as buyers, again, like come off the sidelines. But it's like the idea that and then the buyers come off, first time buyers come off the sidelines. They buy those entry level homes from, uh, you know, somebody who's maybe going to do an upsize, and then that person goes and buys a home, and you start to see more transactions take place. The one X factor that's actually like it's distorting the market a little bit is, and we just did a white paper on this. I'll see if I can pull it up, but this new GST HST thing. I don't know if you saw the Toronto Star put in an article with our research. Let me see if I can find it. Um, but basically, it's funny because the headline didn't really do me any favors, but it says the headline says, will the HST cut on new homes save buyers money? Early look finds that 78% of prices are the same or higher. But like our conclusion was actually that the vast majority of new home prices were. I'm just going to click the share button here. Oh, wrong one. Give me a sec. So this is the headline here, and
Hmm.
I'll click into the article, and then I'll click into our report as well. Um,
So are they basically? I didn't read the article. So what's the findings that essentially the savings are not being passed on to consumers through home?
no, they are. That's the
They
thing.
are okay.
So basically, um, what we found was that uh, about 20%, 20 to 25% of listings showed price reductions on pre-construction, which is very rare, by the way.
Okay.
75% showed no change, and about 3%, 3 to 5% showed price increases. But in the instances where the prices were increased, they were increased by less than the magnitude of the rebate that buyers are getting. And as it stands right now, like it's important to understand the mechanics of this. So if I'm a buyer and I get a HST rebate, until that policy has royal assent, it's my responsibility to collect the rebate. Once it has royal assent, then builders typically will just do the rebate for you. So they'll collect the rebate and they'll discount the price accordingly.
Okay.
But it doesn't have that yet. And so they're not able to do that mechanically or like legally. Some are like sort of, but not technically on their APS.
So
So
right now it falls on the buyer to
exactly. So
essentially
the
do it. Okay.
price,
Yeah.
so the price that you're seeing, the unchanged prices, the 75% that were unchanged, and the 80%, or sorry, the 20% that were reduced, and the anything that was raised less than, let's say, 10%, which is kind of that new threshold, if you exclude like the 24,000 that you could originally get from an HST rebate, et cetera. Anything that was raised less than 10% is also at a discount if the buyer can collect that full HST rebate. So
Okay.
the closer to reality is actually that all resale prices, or nearly all resale prices, have actually come down lower than, or sorry, pre-con prices have come down lower than they were before the policy.
So it's
This will
basically a mail-in
probably,
rebate, huh? That's you have to
until
almost do a
until the
mail-in
policy,
rebate. Yeah, until they give
until the
royal
policy
assent.
is
Yeah.
passed, yeah. And the challenge with that is like not a lot of buyers are going to capture it now because they have to front that whole cost and then they
Mm.
get it back, right? So there's
Yeah.
like a bit of a liquidity, cash flow issue, let's call it.
Mm.
But what this tells me is that we actually, like, in the white paper, we actually like went into the game theory of it. I'll see if I can find the actual, like, basically, like, we found that we think that builders are basically playing chicken, right, with the market. So some are cutting to try and expedite sales, but the reality is that I don't know where my matrix is for the game theory here, but if they were to reduce before it gets royal assent, then they sort of have eliminated their um, pricing power. And so what we expect is we'll actually see a lot more builders reduce prices um, after the rebates in, and they can capture it and mechanize it, like, within their transaction. So I think we're still early, and what we're going to do is we're going to revisit this. But my guess is that this has sustained downward pressure on the market because those upsizers I was just talking about are now maybe buying brand new homes and not resale homes. Or the first time buyers that I was just talking about are now buying brand new homes. Like, brand new homes just functionally went down 10% in cost. So
Yeah.
the you know the my incentive to buy a new home versus a resale home just went up, and so it pulls demand away from resale.
And I would say that's like probably the most pronounced for condos, right? That kind of impact because again,
It
you have
depends. In Toronto, it's going to be pronounced for condos, but the problem is, like, a condo builder at like a 10% discount, even if they could reduce by 20% as a result of some of these changes, it's still not going to get them to the market clearing price. Like, your
Mhm.
cost structure as a builder, even if you bought land like yesterday or your land cost was zero, construction costs are massive to build high rise, like, concrete structures. So it's it's not actually that it's not going to move the needle for high rise. It will move the needle for low rise, and that's where we're seeing a lot of demand.
Okay.
Maybe not a lot is hyperbolic. We're seeing some demand move over into new resale because it's more agile. It can build fast. You can take possession of a unit within a year of buying it pre-con, so you're not exposed to a ton of market risk.
What
It's more
about single
practical.
family homes and
That's what I'm talking about.
semi-detached? Okay, low
Yeah,
rise. Okay,
exactly.
I wasn't
Yeah,
sure if low rise encompassed everything. And
yeah.
pardon my lack of knowledge in this
No,
space.
it's okay, man.
You're
I,
much more
I appreciate
knowledgeable.
it.
So, people listening, for those who have less knowledge, you probably appreciate my newbie questions there.
Yeah, no, I do. I mean, I think, like, well, a lot of the listeners probably like that, like having it, normal. I always talk like in just, real estate
Yeah.
industry terms.
Hmm.
So, um, but yeah, so I think that that's a really interesting phenomena happening right now. And
Okay, and
I
in
would say,
terms of just sticking with real estate, like what are you finding in terms of data? Maybe some of the big regions in the country so far for the spring market, because now
yeah.
not being an expert or anything, I would think we probably have a pretty good idea of where it's trending towards, and like mid April, late April. Like we probably have data up till March, I would think, right?
Yeah, so we have March data. Comes out, Korea data comes out on the 15th. So when that forecast that you were referencing came out, I can pull
Mm-hmm.
up some charts here on, like, year over year data because we'll see. So as it stands right now, man, it's not looking good anywhere. Tell you that much. Like, I honestly thought, and this was I originally said pre trade war, war, that, as house prices continue to come down, all other things remaining equal, more buyers can afford them, and so we would see an increase in volume. I sort of changed my forecast when I started to see some of that turbulence happen, and said, okay, this is obviously going to postpone that phenomenon that I described because it introduces uncertainty, and your consumer loses confidence. But what I would say is last year was the worst year like ever in Canadian real estate. Trab, Korea stats, etc. Magnitude was a little bit better than the 1990s, but in the 1990s
Hmm.
our population was
Like
10%
worst year based
smaller,
on
right?
what? Like year over year decline in volume,
Number of home sales, yeah,
prices,
number
a
of
number.
homes
Okay.
sold,
Mm.
and then I think like maybe more appropriately, number of homes sold relative to the size of the population. So in the 1990s, we did see fewer home sales, um, but our population was 10% smaller during that period of time, right? So if I go to unit sales and like I'll just add in like, some of the worst years ever. So if I go to like, I think it was like 94, 95.
Were you even born then,
Um,
man?
no, I was not. I know I was. I was a 91 baby. I don't know. I have 2027 here. So we go 25, 26, and then I have like 95, 94. So 25, 26. So we're worse than we were in 2025 is your red line here. 2026 is so far. So last year was the worst year ever, right? It
Yeah.
was worse than the only time that it was that was worse was this green line here, which is 1995. It was a horrible, like the absolute bottom of the last housing cycle. But again, remember, population was about 10% smaller. So we're tracking for below 2025 numbers,
Well, and last
which
year
was
too, we had all the trade war stuff happening right at the beginning
yeah,
of the year, and
yeah,
now this year we have everything going on the geopolitical front. I mean, in Ottawa
yeah,
here, I know it's not the biggest market, but there's a lot of uncertainty around federal government jobs. So from what I'm
for
hearing
sure,
from local realtors, is the market is really, really slow, whether you're in Ottawa or on the Quebec side.
100%. Yeah, yeah. So bad real estate market all around. Like
Mm.
just nothing good to say about like the number of sales that are taking place. And I think the government has realized this. I mean, February unemployment came out. They realized that we're losing a lot of jobs, especially in the construction space, and they're like, okay, now it's time to throw the kitchen sink at this problem. And this is where you start getting all of these policies that are designed to try and stimulate construction, try and stimulate home sales, because I mean, if you look at residential investment as a portion of Canadian GDP, it's like almost 10%, I think. Whereas like, the US, maybe a more healthy economy, perhaps based on some people's analysis, mine included. But if I
Hmm.
pull this chart here that shows residential investment as a percentage of Canadian GDP, I mean, like after '08, global financial crisis, the U.S. sort of sobered up and said, "Hey, we can't build an economy on a housing Ponzi scheme." And Canada was like, "Watch us, hold
Yeah,
my
let's
beer, we'll show
double
you."
down. We'll
Yeah,
see who wins. Let's just
yeah.
try the opposite. Yeah.
Well, that was when we started our addiction to money printing and record low credit rates, and now
Hmm.
we're just realizing maybe that wasn't an exceptionally good idea or good way to build an economy, right?
Yeah, and I
So,
guess rates too are just mortgage rates are just staying pretty sticky around. Like I know you're more in tune with those, but from what I'm seeing, it's what like low fours, low to mid fours for
yeah,
fixed rates
low
for the
fours. You're
most
seeing
part.
some high three
Yeah,
stuff. Yeah.
yeah,
But yeah, I mean, bond yields like still pretty sticky.
yeah.
It's looking like it's trying to price a little bit more downside than upside now, but lenders aren't eager. I mean, like the other thing is spreads, right? So you've got your bond yield, which sort of dictates the baseline, but then you've still got the spread over the bond yield. So it's like GOC plus, 1 to 2.
Hmm.
Now we're trending sort of on the higher end of that bound because lenders are taking a risk premium, right?
Yeah, there you
So,
go. Here, yeah.
yeah,
Well, it's ever since the start of the Iran war, bond yields have trended up, obviously following the U.S. 10-year, but just yeah, and
yeah.
I mean, you can't really expect lenders to just constantly be changing the rates just based on every little thing, right? They probably need a little bit of certainty as to where they're going, at least in the short term.
Yeah, I also think like lenders aren't super like I don't know if they care a ton about like new mortgage originations right now, like acquisition loans, because there's a lot of risk and they have to figure out a way to price that in. And they haven't cared a ton over the last little bit because we've had this renewal wave in the last 2 years, and they know that most of their borrowers are trapped, right? Like
Yeah.
so if honestly, like if I'm with RBC, like it's not like I'm shopping that loan to BMO or somebody else, like because I wouldn't qualify, and so I just have to. My only option is to check the renewal box on and I'm back with RBC, and so they got me again for another 5-year term. So they're like, okay, well, this credit's already on our books. We're already exposed to the risk of it,
Mm.
and we're getting a renewal at a new higher rate that basically we can choose because the person can't shop. And they're not being dicks about it. Like
No,
they're
no,
giving
but
people
they also
relatively
have
fair rates.
better data on you than other lenders too, right? You've
Right.
been a
Yeah.
client with them for 3, 4, 5 years, however long you've been with them in terms of your previous term.
Yeah, for sure. And yeah, the Bank of Canada did some interesting research on this. I'll pull it up here. So there's two, and then I guess we can move on to the trade war because I really want to hear
Yeah.
your take on kind of like trade war stuff.
Mhm.
But yeah, so the Bank of Canada put out two reports. One was how will mortgage payments change it on renewal, and this was towards the end of last year. And the other one was called using new loan data to better understand mortgage holders. So I'll start with the first one. So basically, the big takeaway from my perspective is that actually the vast majority, not vast majority, but 43% of borrowers by the end of this year will actually see no change in payment. You'll see a small portion, about 24%, see payments decrease, and then about a third will see payment increases.
But those are
Last
all
year,
borrowers, right?
that's
That's not
everybody.
just
Yeah,
renewals. Yeah. Okay.
yeah. So, but this is yeah, yeah, exactly.
Yeah.
But about one third of all mortgage holders are likely to see payment increases by the end of 2026. And I think we mention like the OSFI thing. Like OSFI basically warned that like 25 or 150,000 Canadians.
No, we didn't.
Yeah, so OSFI warned that there could be mortgage stress for as many as 150,000 Canadians. And you're starting to see delinquencies rise, especially in Toronto. Actually, let me see if I can find the CMHC one.
Yeah, are you seeing a lot of power of sales listing more and more or in the GTA?
Yeah, so I've actually started tracking this at a national level.
Yeah.
I'll pull that up next. But basically, if you look at mortgage delinquencies here, you can see Toronto, the salmon colored line, I guess. I can zoom in maybe just
Yeah.
to get it made it a little bit more clear. But like everybody else looks like pretty flatlined, right? And then you just see Toronto just ripping. So that's a phenomenon worth paying attention
Yeah.
to. But yeah, we've seen power of sale like we built a tool on our website that we have like for our podcast listeners. So if I go to my distress report here, Ontario, I mean, it's hard to tell because like Ontario is also the biggest market, but Ontario has the vast majority of distress deals, and this shows power of sale, motivated sellers. So that's where the realtor would
It,
put like in the listing motivated,
well,
and
yeah,
then
exactly.
also
So, like, do you have to go like scrape the data by listing to know whether it's a power sell and look for certain kind of things on,
yeah.
or is there
So
actual official data provided?
there's a couple of different ways that you can do it. So the way that I did in this analysis is it basically just searches on the Canadian Real Estate Association's DDF, which doesn't account for all listings, by the way. It's only the listings that appear on realtor.ca. And I search for in the public remarks because that's all I can legally share and create data from. In the public remarks listed under power of sale or like the words power of sale, and there's a confidence
Yeah.
score, confidence interval here, and in the report as well of like where the couple of terms that we're using, but basically foreclosure, power of sale, sellers that are considered motivated by the realtor within the listing comments, and then vendor take back mortgages as well. But you can only search legally that of something I can put out in public. I can only search within seller remarks. The next layer would be actually engaging a realtor because like real estate data is sort of like cartelized, and I don't say that as like a criticism. It's just like the way the industry was structured
Yeah.
over a long period of time that that each like these local boards sort of have access to this data. There's a lot of opacity. They own it, and it is private data, so I can understand sort of why they've been protective of that. But you need a realtor to access anything that sellers don't want to be publicized, right? So for privacy rules, depending on the lender, a lot of listings won't say that they're a power of sale in the public comments. It'll only say it in the private comments so that another realtor who has access to the back end can see that it's listed under power of sale. So it would either show up there in what's called the broker remarks or the private remarks, and then the other place that it would show up is in the seller name.
Okay. Yeah, I was gonna like a
bank
corporation.
name,
Yeah,
and then in
yeah. Okay.
brackets like listed under power of sale. So to answer your question, like this captures about a third of the listings. The private marks would capture about another third, so you'd get two-thirds there if you combine those two methods, and then the seller name should capture about another third, or maybe actually, to be honest, it's probably more like a quarter, a quarter, a quarter, and then 25% are almost impossible to capture in the data. And I've
It's
also had
pretty
like people.
crazy that they don't like. There's not a way to like accurately do that aside
Oh, I
from
know.
like
Trust me.
essentially
Trust me.
going into the listings and figuring it out.
Yeah, I know, man. It is. It's. I mean, this is where we're at, right? Like, it. It's a question of. I mean, when you get a violent counter cycle like this, I mean, I think, like, let's play. Let me play the devil's advocate here. Just to kind of like try and back up why the boards might be doing this. If I went power of sale and I was embarrassed, and I didn't want everyone to be able to know when they clicked on realtor.ca that I lost my home, right? That might be one reason why they feel like this is sensitive, like private data that they don't want being publicized on the listing websites.
Yeah, I mean, I'm just thinking more of the aggregate data, not like going granular on,
Right.
you know,
Yeah.
on
Well, I
different.
can I can
Yeah.
technically aggregate that data. I just have to give like I can't. I would have to give you a login to access like the portal and have to
Okay.
confirm that you're a bona fide client who is using this data for the purposes of trying to transact better,
Mm.
to be able to show it to you. Like that's sort of like how our like data agreements work with the real estate
Okay.
boards, which I'm
No,
quite
it's. I
familiar
mean,
with because I
I've always found it very opaque in terms of data. I mean,
it's
just
by
the
design
advent.
for sure.
Yeah, just the advent. Like some big progress was stuff like House Sigma for someone
Mhm.
who is not a realtor,
Yeah.
for the everyday person. I think just having access to that, I think, was a big push forward. But then again, I think it's not across Canada either. I think it's just to specific provinces. I don't think Quebec has anything like that. So,
No, yeah. So there was
yeah,
like there was this whole lawsuit between the Toronto Real Estate Board and a company called Zoocasa, which was at that time owned by Rogers, right? So they were, they were well heeled and
they
had
were,
had
yeah,
decent lawyers. Yeah. So
they were
so
well
basically,
bankrolled. Yeah.
yeah, and so Zoocasa basically set the precedent that vow data, which is like sold data. So there's like two layers. I won't get too into the technical stuff, but like basically sold data was should be publicly available information.
Okay, no, that's good. But we can move on if you want to the trade war. Anything else you wanted to mention of note for the housing market? Or
No, I don't think so. I mean, I think that covers a lot of it. And yeah, I mean, I won't even dive in too much on this extra Bank of Canada data. We can cover it another time as we
mm-hmm.
kind of move through that mortgage renewal wall. But one thing I would say is like if anybody wants, I see like Lars and Adrian in the comments here. If you guys have a question you want us to cover on the show, let us know and
Yeah,
we're happy to do it. And yeah, let's get into the trade war here. I have some stuff I want to present, but you hit me first because
yeah.
I just
Well,
rambled on
maybe
about real
before
estate.
the
You got me
trade
going
war.
on housing, so.
Yeah, just before the trade war, quick. Just on the oil shocks, I was doing a little bit of research, not to rehash the Strait of Hormuz or anything like that, but just the impact that we're starting to see. Because people know that I love to listen to calls to like earnings call just to see what CEOs of various companies are saying. And last year, when we had Liberation Day, the aftermath, the tariff shock that we saw, it was really interesting just to see what CEOs of manufacturers, especially, were saying of what the impact would be on their business. And airlines have started to come out and showing that it's going to be just a massive impact. So I'll just give quick three example here. United Airlines reduced its earning per share guidance by 30%, just using the mid-range here for the full year, already reducing by 30% for the full year. And that previous guidance was done 3 months ago at the end of Q4. So it just goes to show they're also reducing capacity. American Airlines, same kind of thing, but they're reducing the guidance by 80% for earnings. So not great. And they said they'll have an increased hit of $4 billion in expenses on higher oil prices. And Air Canada hasn't reported yet, but they've already started to cancel routes that were not profitable. So that is
Yeah.
one thing I'm definitely looking at. And just to kind of transition here to the trade war, but also how the economy is doing in Canada and the US, I think it's going to be really fascinating to just hear what CEOs of companies that rely a lot on, fuel of some sort as an input for their business, and obviously higher costs and how that's going to impact. And it may also lead to some job losses, as companies may find it more attractive to reduce operations a little bit because it's just no longer profitable. Like, I don't have any other example on top of my head, but I'm sure there are some. But the airlines is just an easy example where, okay, that route was barely profitable. It no longer is with these higher fuel costs. So we're just going to stop doing that, or they're going to start slapping on some fuel surcharges. I believe Air Canada announced some higher, like a $50 fuel surcharge for some sunny destination. Could have been Sunwing, another company, but I remember reading that. But just wanted to just bring this in to show a little bit what not only the Canadian economy but the U.S. economy is facing with those higher oil prices.
Yeah, we're seeing it on food too, right? Like you're seeing food suppliers adding surcharges to as well.
Mm-hmm.
Like Sobeys and Safeway's owners saying they're refusing to pay the charges. Smaller grocers say they don't have a choice, right?
Yeah.
So I mean, like there's no way this doesn't materialize in cost push inflation, and probably demand destruction at a certain point, right? Households just can be continue to be just constrained. The other piece I think is on the trade war side is like, we already saw kind of a wave, like, so we saw like some inflation coming from that, right? Like, tariffs being pushed through to the consumer, et cetera. But it turned out to be a little bit probably net more downside than upside on consumption. Like as costs for certain goods went up, people just shifted, you don't have to buy
for alternatives. Like, yeah.
Exactly.
They push it back, right? Or push it. I think we also saw for tariffs. Remember last year, I don't remember the exact month, but we saw like businesses like just pushing forward their orders to make sure they wouldn't be slapped on tariffs. I think it was the same thing for consumers. I think the auto sales were doing pretty good before the tariffs kicked in, because people were essentially buying those cars before there would be any tariff slapped on. So you definitely see some behavior shifts whenever there was an increased risk of tariffs.
Yeah, 100%. And then, so I guess the next question becomes like, where, geographically in Canada, do we start thinking about, what cities are the most vulnerable? And I know Canadian Chamber of Commerce, like, so we've seen, like, if you think about some layoffs, like there was the auto sector stuff in Brampton, Oshawa's been getting hit quite a bit. Windsor, I think, now has the highest unemployment in the country, and then Toronto shortly behind. You've got the big Oakville Ford plant that's been like retooling for like 2 years and furloughed a bunch of workers, and that's sort of like an uncertain future. But there's also ways that you can just sort of look at this geographically and say like, okay, which American cities, which Canadian cities are most export dependent on Canada, and then where was the other one? There was a Canadian version from Oxford Economics. Here it is. Provincial exposure to U.S. trade, and basically you've got Alberta, New Brunswick. Ontario is actually not massively exposed from a GDP perspective. From an export perspective, they are. It would be like 80%. Mm-hmm. And then there's like basically, like, if you map this out, it's like your 401 corridor from basically Windsor to Montreal, and then a lot of exposure obviously in Calgary on the oil side, but oil's been less impacted on the tariffs. I think there is 10% still, and a lot of,
I think so,
exemptions.
And yeah, but then you also, it's 10%, but the Western Canadian Select tends to trade at a discount anyways, so it's probably still a pretty attractive source of energy for the U.S., especially given all the pipelines that are going there. And I think Quebec's one to keep in mind too, with higher aluminum tariffs. Saguenay-Lac-Saint-Jean.
Saguenay,
yeah, Saguenay.
You said it the right way.
Yeah, Saguenay-Lac-Saint-Jean definitely would have a pretty big impact there on exports too.
Yeah. Yeah, so I think this is going to be interesting to watch and like understand. I don't know, like what's your kind of case, your base case for how CUSMA renegotiations are going to play out?
I mean, I just wish like the U.S. will do what the U.S. will do publicly, right? Like you just have to. I mean,
But like, do
let's
you
be
believe
honest.
Lutnick? Like, what was the Lutnick comments? Let me try and
Yeah,
find
he
them. Like, where
said
he just said
like
like, can't they
Canada
suck?
sucks or something.
Yeah.
Yeah, something like that. I
Like,
mean,
do you believe like are they just
yeah.
playing tough guy, or like do you believe that they'll actually? Because
I
like
mean,
I've heard
Lutnick
both
says a
sides,
lot of
right?
shit too. He said he had only met um, Epstein like once quickly, and then emails started coming out of a whole bunch of back and forth. So I do take whatever he says with a grain of salt. Like he'll,
Well, I think all
yeah,
politicians,
yeah,
right? Like
exactly.
it's
That's it.
it's like
And but just in the U.S., it's really clear that they'll do whatever they think Trump will like. So they'll say
yeah,
publicly, and they'll kind of follow in the same kind of behavior. So I'm not really surprised from Canada's perspective. I would just wish we'd not do it publicly because it
yeah, I
does
agree. I
seem
think
like, yeah,
well,
they take it personally every time. They take it personally, and it feels like, at least if it was behind closed doors, just convey the same message. But it does feel like, to me, and not to make this political, but it does feel like Carney is trying to get some political points, when I think the
like
best approach.
globally from like other leaders or from Canadians, because like like
uh
this is my thought. It's like what he doesn't really score points now that he has a majority in Canada. Like there's no election coming up. Like,
no,
do you really
but he
need
may
to
have
like
designs on a second term, right? So I think it's both domestically
right,
and geopolitically as well, or on the
right?
international basis.
I guess if he's operating under the assumption that the Republicans lose the House in the midterm, and that probably like if the Democrats can nominate a electable candidate for the first time in decades, that that Trump doesn't, or I guess not Trump, although it does sound like he would have no objection to running again, but probably Vance, right?
Hmm.
If if it's like Vance versus probably Gavin Newsom, I think, right, at this rate. Um,
Yeah, Gavin Newsom,
which I feel like is like pretty
Racy. Yeah,
electable guy,
yeah.
man. No, AOC is
AOC,
no,
sorry.
not,
AOC, yeah.
yeah. Um, yeah, I feel like, but like so anyway, like let's assume that like Carney's maybe running on the basis that a year prior to the next Canadian election, the Democrats win, and he would want to have a much better relationship with whoever's on, you know, maybe the competitor to Trump than Trump. I'm not sure,
Yeah.
but it's like, is that his strategy?
Well, even if that's the strategy, like what guarantee do we have that the relationship will be that much better? Maybe it'll just be U.S. America first, but different priorities than Trump. And I
Right.
think we often forget that. Like it's not. I think Trump has moved um, the U.S. to a, you know, America first. I think everyone can agree to that. Someone saying, "Yeah, MAGA is dead." I mean, whether they're no longer on board or not, I mean, I think it just remains that I think in the U.S., Americans want their government to focus on them more, right? Like I think that's
Yeah.
going to be. I don't think that's going any like away anytime soon. Whether Democrats or Republicans actually
Mhm.
continue being in power. So I think it's just going to be shifting priorities, whether it takes a more socialist bent, which I think is probably what's going to happen if the Democrats come in, but they'll still focus a bit more on America. And I just don't know whether that is the priority would be improving trade ties with Canada or not. I really don't know.
Yeah, I have no idea either, honestly. I think uh, would lend, like, based on what I've heard, and like it's crazy when you go, like I go to the US every year for like 2 weeks to a month, and do a lot of business with people in the US as well. Our SaaS product, like a lot of US realtors, and people don't even talk about this stuff. Like people in Canada talk more about Trump than like politics in the US, right? Like once the
Mm-hmm.
election's over, it's like just on with our lives and like let's move on,
Yeah.
right? But I think that like positioning like, hey, we're maybe not going to bully Canada, which like I don't think is actually maybe necessarily the case, but that their goal would be to sort of like avoid that could be a winning strategy to like it seems like most people aren't super down for that, right? Like most people love Canada, they want to have a good relationship with Canada, they don't want
Mm-hmm.
to penalize Canada, but then you kind of go back to like Lutnick. like his philosophy. I don't know if you heard him on. I think it was like the All In podcast.
Yeah,
They
yeah.
like if you hear him talk about it, like he really truly believes that this like tariff system and mercantilism can basically become a revenue strategy for the U.S. government, where they are able to push that cost burden onto they believe other countries, and
Hmm.
it actually ends up being the U.S. consumer, uh, sort of how like functionally it works in economic terms. But I think that that philosophy is kind of like a driving force. Like they actually are trying to generate revenue to make the U.S. maybe a more investable market, more like better at servicing debt, et cetera, sort of sustaining that dollar dominance. So it wouldn't surprise me if like they're genuine in their attempts uh, to like build tariffs as a revenue stream. Whether or not, I mean, I think historically mercantilism almost always fails, right? So whether or not it's a successful strategy remains to
Yeah.
be proven, but it doesn't really matter because it sounds like you're going to try it anyway. So what are the consequences of them trying?
Mm. Well, and even before what we're seeing, I think a lot of people were talking about free trade, but let's be realistic. There was never free trade. There was
Right.
subsidies. There was always
Yeah.
some governments, and Canada is not an exception to that, right? We provide subsidies to you name whatever industry. When free trade typically, ideally free trade is you you produce whatever you're the best at producing, and then other trading partners will produce whatever they're the best. They'll be better at you at producing item A, you'll be better at producing item B, and then you do some free trade based on that, whatever your competitive advantage is. But we never saw that. I mean, free trade was really largely a joke, never really happened. But now we're starting to swing to the other end of the spectrum. I do wonder, though, what we're seeing on the geopolitical front. I think that's going to have an impact on negotiations, because I feel like the U.S. will start seeing, okay, I still think they're focusing a lot on tariffs, but I think geopolitical national security and having a bloc, at least Mexico, Canada, and the U.S., that's a pretty resilient bloc in terms of natural resources, production capacity. I think that's going to take more and more an importance, and it may end up being beneficial for Canada, because we can offer a whole lot of resources. It's not
Yeah.
just oil, right? If you're thinking even fertilizer, right? Saskatchewan, big fertilizer producer there. That's not
One
reliant
of the
on the
largest in the
Middle
world,
East.
I think, right? Like,
One of the largest in the
um,
world for sure.
yeah.
So
India
it's
consumes like the majority of
yeah,
Saskatchewan's fertilizer. The
yeah.
other
We
thing is the
have
Enbridge announcement today on the nat gas. Did you see that?
no, I didn't see that. What was that announcement?
Enbridge launches a $4 billion expansion of the BC pipeline system for natural gas. Um,
Wow.
I'll
From where to
yeah.
where?
So let's see. Let's pull it up here. As an Enbridge shareholder, I'm fired up about this one. But I mean, like, man, it's crazy because like we've spoken with a couple of people at Enbridge. I mean, obviously they interact with our industry a lot, right? Like we've
Yeah.
talked about potentially doing some sponsorship deals with them, et cetera. And they're like, yeah, we're really heavy on expansion in the U.S. I think it was Colorado and Utah, because Canada was such a nightmare for them to get it done. And now they're going to add, what is this, 139 kilometers of pipeline, then boost capacity by 300 million cubic feet a day. Um,
So where is the
and
pipeline running from?
I think Alberta to BC.
Alberta to BC. Okay.
Yeah, I can't find a. Here we go. Oh man, everybody's got these
Yeah.
things
Those,
now. Oh, it's investing.com. I got one. But
they
yeah,
must have
let's see
gotten some
exactly what it is.
guarantees from the federal government, I would think.
Sunrise expansion program. Where is it? I don't know. Doesn't actually say. 2,900 kilometers from northeast British Columbia to the Canada-U.S. border. There you go.
Okay.
So, um, again, I don't think it's just um, gas, or gasoline, oil. It's also
And that,
other
yeah, it
resources
must
like
be
you
natural
mentioned,
gas.
electricity. No,
Yeah.
no, yeah, but I mean, like when I think about trade war, like you're talking about
Yeah.
resources, right?
Yeah.
Fertilizer, Ring of Fire, huge like critical minerals, rare earths, which we obviously nobody in this whole like hemisphere has the ability to refine yet, but I think from a resource perspective, battery metals, right? Like a lot of the inputs in electric cars and in semiconductors, et cetera. Um, Canada has a lot of this stuff.
Yeah,
I
Mexico's a
guess the
big.
question,
There's a big silver producer. I think that's
yeah. So I guess the
often.
question becomes like,
Mm.
is this them positioning to get a better deal on our resources, and it actually ends up being net bullish for Canada as we become, they want more of what we
Yeah.
have. I don't know.
Well, I think it's
Maybe
going
that
to
would be
help
great.
in negotiations. I really think it will. Like, how can the U.S. not change its position a little bit? I mean, they probably won't in public because clearly they don't want to look weak. Like, weakness
No,
from that Trump administration is never
but then you get like
something
the
that they
taco
would.
trade, right? Where it's like,
Well, yeah,
says
they
one thing,
constantly
but
says one thing, does another. Like the taco trade
yeah,
is, whether it's working or not anymore, we'll have to see. But I mean, they probably don't want to look weak with other trading partners. But in private, if they can make that kind of agreement and that kind of security, especially seeing what's happening in the Middle East, I mean, I think that's an extra incentive for them. Like
yeah,
the
100%.
U.S. I mean, the U.S. is still impacted by what's happening there. So if they can guarantee themselves to, you know, use Canada and Mexico as major partner, kind of create this like almost mini trading block here, that provides a whole lot of security to the U.S. Like I would be very surprised if that didn't start being in consideration, and then have less reliance more and more on China or other European countries that the U.S. is not too fond of right now.
Yeah, yeah. So is the termination of the trade war in Kuzma net bullish for Canada then, or is it like you're going to tear it up and it's going to be net bearish? I think like I look
What's
at
that?
like auto
Sorry, I was looking at
sector.
comments. So yeah.
Oh, is it net bullish for like like how do you think Kuzma is going to go? Positive or negative for Canada later this year? I feel like negative is probably like short term negative.
Yeah, I mean, I feel like it'll probably be better than a lot of people expect. Maybe
Right.
that's a little bit of a cop out in terms of an answer, but I think it's going to be better than people expect. I think both Canada and the U.S., but like the U.S. is going to want a narrative that they can say, "Look what we gained."
Right.
So they're gonna want to say like, "Oh, like you know." See what we did. The tariffs ended up getting us a much
Right.
better deal on X, Y,
Yeah. Yeah.
and
They need to
Z.
deliver results.
Exactly. And
Yeah.
then Canada will
That's a
be
good point.
able to spin that in another way where, okay, we held our own, elbows up, all that bullshit. They'll be able to kind of turn around. So I think it's going to be something like that where Trump and the administration will be able to essentially justify their approach and say they got a better deal out of Canada and Mexico. And then, Canada, probably Mexico. I'm not as familiar with Mexico politics, but they'll be able to also turn around and say, look, we ended up getting rid of, half of the tariffs on aluminum and steel or whatever it is.
Right. Um, so status quo, basically. What's the trade? Like, what are the second order effects? What are you watching? Where's the opportunity here?
For what, like investing or?
Yeah, yeah. Lever up. I mean, that's what we talk about here, right?
Yeah.
Investing. Lever up and buy houses in Sudbury, the Ring of Fire, Saskatchewan. That's all I
I
know how to
mean,
do.
I
To get
think,
exposure.
yeah, that's a good question. I mean, there are some defense plays I think that would be interesting in Canada. Um, so I think CAE would be an interesting one. They do like flight simulators, other things. So these they could probably benefit from a new trade deal or a revamp or no change. I'm not quite sure. Nutrien is definitely a really interesting play.
Yeah.
In terms of other, yeah,
What's the
investing
ticker on
in
Nutrien? NTR.
NTR. Yeah, it's dual listed.
There you go. Down 2% today.
Yeah, some lumber plays too
Now
could
you
be
can
interesting.
you can
Um,
trade the swing on Simone dropping it on the show. Just kidding.
yeah.
Not financial
No.
advice.
Well, yeah. So a lot of these companies. So yeah, what is it? Can't remember the company in Sudbury again. Is it Steelco? No.
No, Stelco's Sault Ste. Marie.
Sault Ste. Marie.
There's Valley Inco. There's Kirkland Lake Gold up in Kirkland Lake. I can't remember who it is on the nickel. Um, what is it?
But I could see like
SPC.
a, yeah, like actually speaking of trade discussions. So I don't think we talked about the 24 member new advisory committee. I think they
Yeah,
announced earlier this week with
yeah,
Dominique Leblanc being the chair. I mean, it's an interesting mix, right? So it's a mix of politician, business leaders. You have the
yeah,
CEO of BMO, CNRail, Tech Resources, like some pretty prominent CEOs
yeah,
that will be part of that board. Some
yeah,
other, I think there's also some labor and indigenous leaders part of it. But like a tech resources could be a company like that would really benefit from that. Like they're once they have their merger with Anglo American, they should, I think they'll be like top 3 or 4 in terms of copper production. So you could really see a company like that benefit, especially when you start thinking about AI and electrification. On top of that, and I mean, another part that Canada would likely benefit. Not sure if the trade war will or trade discussions will have a huge impact, but potentially some data centers, like more build out data centers in Canada too, because I think the climate will play a big part in that. Like, who wants to build a data center in
yeah.
Texas when it's
Cold climate.
40
Did you see the
Celsius?
thing in the logic on the data centers in Canada?
No, I didn't see it.
It's pretty interesting. Like it's mostly in. I'll pull it up. Sorry, I had the map up for them from the
Yeah,
Enbridge
the
expansion, just in
Enbridge.
case you
Yeah,
wanted to see it. But yeah, so here this is like really interesting because like you mentioned environment from a cool climate perspective, but the other piece is like we're like the environmentalism, right? ESG, whatever,
mm,
but it seems like the majority of data centers are in Alberta where they're
yeah,
basically flaring natural gas to power
yeah.
them. So I just think it's really funny, right?
Well, I was
It's
listening to a
like,
podcast yesterday, what Bitcoin did, and the guest was talking about like essentially data centers taking away from energy that was being used by Bitcoin miners because they were
yeah, for sure,
leveraging,
man. Like,
yeah, because for those like not super familiar with Bitcoin miners, essentially what they were doing is they would go to these like natural gas production sites, or I think in the
yeah,
U.S. the shale basin, they'd
yeah,
be, instead of flaring up gas, they could power up some Bitcoin mining rigs, and they don't
yeah,
really need to be connected to the grid because you have internet now that
yeah.
accessible wherever you are. So they could really leverage those lower costs. But now, if you think of data centers, I mean, data centers can do the exact same thing essentially, right?
It's funny, right? Because you get like there's actually some really interesting Canadian plays, like Hut 8
Yeah,
is like
yeah,
they were Bitcoin mining. And I used to be deep in the space, man. Like
mm.
2016,
Yeah. I remember you
when
were
like you saw
talking
that
about that.
bull case,
Yeah,
that bull run on Bitcoin. Like we were flying around the country trying to find sites for guys to run mining operations, Bitcoin mining operations. Like literally like shut down power plants, like or not nuclear, but the hydroelectric, like old
mm-hmm.
hydroelectrics, and like we were
Yeah,
driving like the furthest reaches of like northern, Manitoba to find like these old and they wanted to set up just to get access to cheap power. The challenge with Canada, and this is why the data centers are there, is like just because our power is renewable and plentiful and whatever doesn't mean it's affordable, right? Like you can still like your fossil fuels are still like the cheapest way to generate electricity, right? And so that's why people are like and the nat gas, like the natural gas like flaring in Alberta that's happening to for a lot of these data centers, they're gonna do that anyway. Like they're literally they
yeah.
have excess amount, right? So they just burn it. So you might as well convert it to energy and produce some economic output as a result. Because if you're just going like if you're just worried about like the ESG element of it, it's like they're just going to burn it and it's going to go into the atmosphere anyway. Should we benefit from that in some way? Probably,
It's
right?
funny
Am I
how
like
people
I think
don't seem to care about ESG when it comes to AI. Huh? It's just like
I
just
know.
fucking build it.
Well, I don't think people care anyways anymore. Like I think like
Yeah.
a lot of those things like um were they happened during a period of time when like the like life was so good that we had to like imagine problems, right? We had to like create new enemies to like feel the human experience of like
Mm.
strife. Like I think this is where you kind of got into like oppression Olympics, a lot of like identity politics, a lot of like indigenous stuff, which has led to sort of like maybe an overexposure to that, like from like a populist perspective, and some of those issues coming to a head now with like land use rights and social issues and whatever. Like setting the politics of it aside, right? I think that people are a bit exhausted by that stuff, and it tends to be getting less attention. Same thing with most of the ESG, because we have real problems now. We have like not a good economy. People are struggling, right? Like they don't want to try and give attention to other problems outside of their own scope, right? That most people are just trying to get by right now. And so you get to, it's kind of like the hard times create, soft men or whatever it is. Whatever,
Well, it's
weak
true,
men,
right?
weak men create
If
hard
you lose
times.
your job, I mean,
You
do
don't
you really
care.
care about it, ESG? Like, you
Yeah,
care
yeah,
about getting
yeah,
another job. If you can't get electricity because there's a shortage on
yeah.
clean, renewable power, I mean, you'll be pretty happy to get electricity even if it comes from coal.
Right.
I'm gonna
Yeah,
go
like
on a
we'll say,
limb. Yeah, exactly.
yeah, same thing. Like if you lose your job and you're just trying to keep your house heated, are you going to pay a lot of money for,
No, we have
for, oh, that's my next call.
yeah, then we have a
All good.
hitchhiker.
Yeah, no, if you
Hey,
lose your
Cameron.
job,
Yeah.
if you lose your job, Cam's actually an interesting guy. He's trades or does money movement around the country, and we do like a discussion on real estate around the world.
Okay.
Or sorry, does money movement around the world. So, but yeah, like if you lose your job, do you care like about electrifying your heat source so that you can you can heat your house in an ESG way, or like you're just going to take the cheap nat gas, maybe not so cheap, but like cheaper nat gas to heat your house. Like
Yeah.
you probably become cost sensitive and stop caring about what's best for the environment, fortunately or unfortunately, right?
Yeah, exactly. Yeah. Okay. I guess since you have another call coming,
Yeah.
any parting words here before we end this one? Any questions that?
No, no, I think no, there's nothing left in the chat. But thanks a lot for everybody who tuned in. Let's keep it coming.
Mm-hmm.
I don't know. I think
Yeah.
we hit another new high on X, and I
Mm-hmm.
mean not a lot of people on YouTube and whatever, but like I think that's
That's
the
okay.
easiest place for
Yeah.
people to
Mm-hmm.
get us comments or questions. So um,
And let us know if you'd
yeah,
like us to bring in some guests on specific topics, because we're happy to do
yeah,
the research, but sometimes if we can get some experts on a specific topic, we can do that as well. So we can reach out to some people and schedule them for Friday.
yeah, 100%. Okay, amazing, man. Thanks a lot for taking the time.
Yeah.
Always a pleasure to chat macro with you, and for everybody watching. We're going to start putting these on the podcast platform, I think, as of next week. So next week,
Yeah,
I think we're
next
going to
week.
go
Yeah.
try and go pretty deep on the AI stuff, right?
Is that has Braden confirmed it? Is he coming?
I don't
or-
think he has,
Yeah.
but I'll ask him if he can do it. Maybe I'll check in with him right now. I'll send a message, and then I'll send an email, or a text. But if not, I mean, you and I could probably just do it. I can get some
Yeah.
some experts.
We can
on
reach
the-
out to some people too.
Yeah,
Yeah.
100%. Okay, cool,
Okay,
amazing.
let's
All right,
do it.
buddy.
Okay.
Have a good weekend. Talk
Thanks
soon.
for everyone. Yeah.